What a week. 20.1% profit this week using the market reversal alert EA. And that's on 4 different set files running 4 completely different strategies. Every single one of them pretty much green days across the board. So just wanted to basically give you an overview of what's gone on this week. A couple of people have contacted me in the Telegram group about the results this week, which is pretty normal, to be honest, for the strategy, as most people that come in the live room every day will know. Live room's free on YouTube every day. You're watching this on YouTube, go and watch the lives. They're all on there every day. But a few people have asked me to just go through the strategies in a bit more detail, just so that they know how to set up the market reversal alert EA correctly. And you know, there's a lot of settings in there. It's quite confusing for some people. So I'm going to go through them for you. I'm going to go through every strategy in detail, show you exactly how it works. So I'm going to show you the settings for every strategy so that you can replicate these results week on week with the EA. If you want any more help with it, come in the live rooms. They're streamed every day, 7:50 in the morning for the Frankfurt session and at 2:20 in the afternoon for the London session. Those are UK times. So basically I'm on live streaming for Frankfurt Open and I'm on live streaming for the New York Open. So come and join me in the live room for those. So let's jump over to the MT4 terminal and we will have a look at the strategies. So what I've got loaded up here is the ADR reversals strategy, first of all. So the ADR reversal strategy is really, really simple. All we are doing is we are waiting for price to push up to ADR, average daily range. And if you need more information on what average daily range is, you can go onto the YouTube channel. You'll find a video basically explaining ADR, what ADR is, how it works. But it's basically the average daily range of the instrument. And every time we get extended beyond the average daily range of the instrument, you'll see that the odds of it progressing any further are minimized. So here we go. 100 ADR is 42%, meaning that 58% of the time we stay within average daily range. 42% of the time we push beyond it. 23% of the time we push beyond 125, 12% of the time we push beyond 150, etc., etc. So what the ADR strategy is doing is basically paying the mean reversion trade when we get beyond those levels, and then waiting for a sign of strength in the opposite direction, which is basically a market structure break. And then we take a trade short from there, and we take a small scalp out of the market when the market pulls back down again. So the way that we do that is when ADR is extended, we drop to the M5 time frame and we wait for a market reversal alerts EA to trigger a short trade. So this is a structure break basically. And then we just jump in and we grab either a quarter or a half an ADR out of the market, depending on which way you want to play it. So we'll look at a few of the trades that have played out this week. Let me just look at some. So New Zealand dollar yen, we can look at that one. Okay, so there's the New Zealand dollar yen. So as you can see, the average daily range on this is 135 pips. It's showing up in the top right hand corner, sorry, top left hand corner here, 135 pips, and that is a measurement basically there to there. So 135 pip move to the downside or more, and then we wait for a reversal alert which would have triggered there, and then we take a quick scalp out the market. And as you can see, the move here is basically 41 pips, which is just over a quarter of an ADR. So what the market reversal alert EA is set up to do is monitor the market, wait for ADR to get hit or beyond ADR to get hit, and then wait for a reversal alert, which is one of those, which is a structure break, to get into the market and quickly grab a quarter of an ADR. Okay, so that's all that strategy is doing. Really, really simple strategy. Extension, meaning that price is pushed very hard in one direction. As soon as it's done that, it mean reverts and takes some profit from the move it's just created. And all we're doing is we're extracting money out as that profit take move starts. So as you can see, that one's grabbed 5.5% this week. Very little drawdown, sitting in 3 positions over the weekend, which is just around about 0.5% drawdown, so hardly any drawdown. one losing day this week. The rest of the days were all green. So great little strategy. I'll jump over into the VPS in a minute when I've just done a quick rundown of the strategies, and I'll show you the settings for each of the EAs, for the EA in each set file for each of these strategies, just to clarify exactly how it's doing it and what it's doing. So that is your ADR set file. The next one I'm going to look at is H1M5. So I'm just going to quickly log into that account, which is this one here. Okay, so that's logged in now to the H1M5 account. So you can see this one's sitting in some drawdown over the weekend, 2.6%. We've banked 5.63% this week. Pretty good week. And again, this one's a very, very, very simple strategy. And the way this works is we wait for the hourly RSI to get extended beyond the 75 area or the 25 area. So 75 to the upside, 25 to the downside. And all we're doing is as soon as we get those extensions to the downside, we're dropping down onto the 5-minute time frame. So we're using H1 for our entry time frame, or rather H1 for our monitoring time frame for the market condition, and then we're dropping down to M5 to take our entries. So the reversal alert in this case was here. Yeah, there's a structure break, and then we take that trade long. And obviously this one hasn't hit target yet, so it's sitting in this trade. As you can see, this is a New Zealand dollar yen trade, so it's sitting $119 a profit at 0.11%. And that's basically all that one's doing. Very, very simple strategy again. So these are all taught in the position trading bootcamp, which is free on the website. If you go to the marketstructuretrader.com, you'll find the position trading bootcamp there. It's a 5-day course. It's totally free. It's also on YouTube if you want to look at it on YouTube. And it basically teaches you how to position trade. And these are the core strategies that I trade on a daily basis in the live rooms. So you can join me in the live rooms whenever you want to. They're streamed twice a day on YouTube. And I execute these strategies, or rather the EA executes these strategies for me. And we basically extract money out of the market when the market cycles move up and down. So that is your H1M5 strategy. Quickly going to log into the next account, which is H4M5. So this strategy, you can either run it as H4M5 or you can run it as H4M15. And it's very similar to the strategy we just looked at, which is the hourly RSI extension in the 5-minute entry. So this one, all you're doing is you're looking at the 4-hour time frame, and you're looking for extensions on the 4-hour RSI. Okay, and when those market conditions are met, you enter on the lower time frame when there's a structure break, i.e. the market is in exhaustion, and then we jump out when the move comes back down in the opposite direction. So markets push up, the banks get exhausted, they move the market hard, and after they've moved the market hard, they take profit on the move they've just created. So what we do when we see that condition in the market on the 4-hour chart, we drop down to either the 15-minute or the 5, entirely up to you. And then we take a reversal alert when that happens, and we just basically take that move out the market. So if we look at this one, this banked 2.68% this week. It's sitting in a positive drawdown at the moment. Obviously, it's not sitting in any drawdown, it's sitting in profit. But so you're always going to bank a little bit less on this strategy because the 4-hour RSI extensions happen less than the hourly RSI extension. So it's a much safer strategy to trade. However, you'll get less entries. So you can either scale up the risk on them, or you can use a small risk, as I do every day. And obviously just extract a little bit less out of the market, but with a much higher strike rate. So that one, if we have a quick look at an example, if we use something like the euro, let's have a look. I want to pick pound Swiss maybe. That was one that was closed this week. So 4-hour, the trade is here. There's a few examples actually on this chart. So we've got one here, there, entry and exit. There's one there, and there's one there as well. So, and there's also another one there. So quite a few entries on the pound Swiss over the last, this is going back to February, so over the last month, all profitable. But basically, if we have a look at this latest one, you can see that the RSI pushed up, and this trade here was a quick, easy in and out, push up, pull down, exit. Well, this is the one we're looking at here. So we entered there as market pushed up. We took a second entry there, and we as it pushed back down again. Obviously, you could have got a lot more profit out of it, but we're not looking to make a fortune. We're looking to get good, easy trades in and out the market fast, constantly banking all the time, rather than going for those home runs, which may or may not happen. We're just getting in, getting out, small profits, getting it in our P&L, making sure that our P&L is green on a daily basis. So on this one, we pushed up. If we drop down to the M15 time frame, you'll see the trades in there. Okay. There we go. So there's your first entry. That was on that 4-hour RSI extension to the upside. Market pushed a little bit further against us. We took a second reversal alert up here, and then we exited there. Obviously, the market dropped a lot more that day, but we're not looking for an absolute fortune. What we're looking for is, again, a small profit. So this is roughly 50, 60 pips, which is half an ADR. Always looking for small profits. So if you go for those big risk reward trades, you're going to find it a lot more difficult to achieve them because the market won't always move to those extremes. So if you target yourself within the average daily range of the instrument you're trading, you're always going to be able to achieve those results very easily, because 58% of the time the market stays within its average daily range. So if your target is within the average daily range, you're pretty much going to hit it on a daily basis most of the time. Okay, so that is your H4M15 or H4M5, depending on which way you want to trade it. You just get tighter signals on the 5-minute entries than you will on the 15. But again, these are all covered in the bootcamp, which is on the website. They're all covered on the website as well. The strategies are all laid out in detail. And there's one more I wanted to show you as well. So this is a new set file that I'm working on at the moment. This is the hedging set file. Just find the account. It's that one there. Okay, with this one, ignore this monthly figure. This is a demo account. It's from a previous test that's been running. So this set file started running on the 14th. So you can see it's going back way further than that. So if I just reset that to the 14th, which is when the test started, the dashboard, you can see it's banked 11,000, just over 11,000 profit. This is on a 100K account. The dashboard won't update because this updates on tick. And obviously, this is the weekend. Market's closed. We're not ticking. So it's not going to update. So just ignore that figure there. But you can see the bank this week is 6.3%. The overall profit is 11. So last week it did around about 5 or so. But what this strategy is doing, very, very simply, the H1 hedging strategy, it literally takes trades on every H1 reversal alert that happens in the market. So what this strategy is designed to do is, as the market pushes in one direction, we wait for a structure break to happen, a market structure break. So the market structure goes back the other way. As that happens, we go and get into a long position. And then the market, the EA monitors the market, waits for a structure break back in the opposite direction, and then it takes a short position. That trade will either then work or it won't work. And if it pushes against us, we take another trade back in the opposite direction and exit that position. As you can see, it took a little bit of drawdown here. So what happened was we moved 1.5 ADR away from our initial position. So it decided to get out of a third of the position. So it scales out of 30% of that trade, making this second entry much easier to exit. And again, we're targeting no more than half an ADR in profit. So this is a new set file, which is based on a previous set file I had published, which was for the 5-minute time frame, but this is trading the hourly time frame. So the hourly time frame is obviously a lot slower for entries. You get less entries into the market, but those entries are a lot more accurate. So as you can see, we're entering a lot of trades because this is a hedging set file. So it's always going to be in the market in a direction or another direction. Yeah. So if we're going long and we decide to push down with enough force, basically, that we take a short position, we will just basically get in and out and in and out, regardless of which way the market goes. So as we push long, we take long profits, and as we push short, we take short profits. But if those short trades don't work out, we take a second one and we exit on the drawdown, on the push down. But at the same time, we would have taken a long position, which means we're consistently banking. So what's happening is we are always going to be in a position of some kind most of the time on most pairs. And regardless of whether it goes up or down, we bank something. And then we can use this to do drawdown control, i.e. scale out of the positions that don't work. and make sure that we bank green every day. However, keeping on top of the drawdown by scaling out the positions which aren't working. So if a position like this one works perfectly, excellent, we just bank money. If it doesn't work, we use this, a portion of this, to take a little bit of that off. Okay, so as you can see, it's constantly banking. If you look at the P&L on it, what you'll see is lots and lots of small profits. So lots of $150 here and there scattered around, the odd $150 loss, another one there, $200 win there, $400 win with a $130 loss. So as you can see, the vast majority of the trades are all just straight in, straight out profits. But there is scale outs along the way if we need to do drawdown control. But this set file is still in testing. It's working very, very well. But I've included it in the results this week because I've been trading this live in the live room every day for about 6-7 hours a day. So I just thought I'd show the strategy in the results so that you can see exactly what it's doing. So on that note, we'll flick over to the VPS. So this is the VPS that has all of those trades running on it, all those MT4 terminals. As you can see down here, all the MT4 terminals running. And these are all the P&Ls, which I've just showed you. As you can see here, there you go. So this one has the proper profit result because it's actually set to the right start date. So it's banked 11,000. This is the H1 hedging set file. So I'll go through the settings for the market reversal alerts EA in here so you can see exactly what it's doing. You can see that it's running on all these, or every pair basically is running. So we're getting into all the trades so we can test it thoroughly. So what we're doing here, as you can see, very, very simple, is we're entering the market with a 0.2% risk per entry. We are using ADR as our stop loss, and the ADR stop loss is half of an ADR. Okay, there's no take profit used. We're basically getting out of the market when it's moved half an ADR in our favor. So that's stop loss that's entered, and it's the same with every single one of these set files that I'm going to show you. Because we're position trading, we don't use a fixed stop in the market. What we do is we scale in and out of our positions, and we use drawdown control to exit the positions which aren't working. So we're not using a fixed stop, which means we never take a full loss on any position. We'll take a partial loss and use the profits of the winning positions to pay for the losers. So again, everything like that is all taught in the bootcamp, which you can go and watch on YouTube or watch on the website. So that's the stop loss settings. As you can see, we're not using any RSI filters at all. No higher time frame RSI filters. There's no moving average filters. There's nothing. So we're literally saying every time there's a reversal alert on the 1 hour time frame, get us into the market. I.e., we want to get in with the flow of the market. If the market is going long, we want to jump in long with it. What we're doing is we're getting in with multiple positions if we need to, and those are spaced at a minimum of half an ADR apart. So if we get into a position and it moves half an ADR against us, the next reversal alert, as long as it's more than half of an ADR against our initial position, we take a second entry. And then we have our targets here, as you can see, which is closing in profit at a percentage of ADR. So we're closing all of our trades out when they get to a total of half an ADR in profit. Yeah, so the average daily range on this particular pair is 84, which is shown on the dash here. Half of an ADR is 42. So as soon as we push and pull back down 42 pips in our favor, we exit position and bank the profit. We've got drawdown control being activated on these positions as well, as you can see, on a per trade basis. So when the market moves 1.5 ADR against our position, we scale out of 1/3 of that position. So we're not taking a full loss. If we're right on that entry, brilliant, we take the profit. If we're not right, it needs to push a decent distance away from us before we exit that position with 0.3%, so 30% of the trade. By that time, we will have entered a second position as well. And then we wait for market to move down half an ADR as a combination of those two positions to exit both and go flat. And obviously at the same time, we'll probably go long on it as well because it's a hedging strategy. So that's the hedging set file. That's how that one's running there. And that's the one that's banked 6.3% this week. This one is the mean reversion. So this is the H4M5 or H4M15 strategy. As you can see, this was the one that's sitting in profit. It doesn't bank as much. It's banked 2.68% this week, but it's banking regularly and it's taking a lot less positions because the 4-hour RSI extension occurs a lot less than the hourly one. So the set file on this is very, very simple. Again, so exactly the same sort of setup. We're risking 0.25% of our balance, and we're risking that percentage over half of an ADR. So we auto calculate our lot size based on 1/2 of an ADR distance away from our initial entry. And then the only filter setting that we have here is your higher time frame RSI. So we're saying on the 4-hour RSI 14, you need to be extended above the 70 level or below the 30 level. When that happens on the 5-minute time frame, in this case, every time you get that reversal alert, enter long in the market. Yeah, and then just take your profit from there. The TP settings on this one, a little bit different to that previous set file. Again, we're scaling in half an ADR apart between our positions. So if the initial position that we take doesn't work, we scale in half an ADR apart or more, depending when the next reversal alert happens. And we are either taking $500 or half an ADR out of the market in pips, whichever comes first. So the idea of using two targets on this is if you take an initial position and it works first time, so it's straight in, straight out, we want to get out within half an ADR. So we're making a quick profit out of the market. Those will be somewhere in the region of about $200 to $300 a time. If we need to get into 2 positions or maybe 3 positions, we're more likely to hit a profit amount before we are a amount in pips. So what this does is if we push against our initial position, let's say we're short, we take a second short there and a third short there. By the time we get up to this level, we will have done some drawdown control on our initial position and possibly on this one, depending how far it's pushed, meaning that the average price will be somewhere up here and we will be able to exit with $500 profit on all 3 of the positions before we actually reach half an ADR in pips as a total. Because this lot size here will be larger than this one and this one because we are scaling out of our positions when the market moves 0.75 of an ADR against us by 1/3 of those positions. So it makes it easier for us to exit those trades. So that's the settings for the H4M5 or H4M15 strategy that's running. These are all the same as basically published with the initial set of set files. They've had slight tweaks on the ADR drawdown, but that's about it. One setting that's important on all of these is the use fake stop loss to calculate lot size. That's always set to true on every single set file that I use because I'm a position trader. So what I do is I calculate my lot size using a stop loss when I get into my position. And then as soon as the position's entered, the stop loss is removed to make sure that we don't get stopped out on the position. What we're going to do is we're going to build a position in that direction based on the price fluctuations that happen every day in the market due to bank cycles. So that's the H4 set file. And I say that's the one that's produced 2.68% this week. It's never going to be as profitable, but you're going to have a lot less drawdown on it. And it's a lot more of a stable strategy. You can always increase your lot size if you want to take more risk. But obviously, the lower the risk, the less chance of ruin on your account. And obviously, it's consistently going to bank anyway. So. This is the H1 mean reversion set file. I'll whiz through this one because it's pretty much the same as the one you just looked at. We're risking 0.25% on half an ADR. Our entries are based on the hourly this time, not the 4-hourly RSI. And we're using the 75 level instead of the 70. So it's a 75-25 instead of the 70-30. So a little bit more aggressive. I.e. the movement of price needs to be a bit stronger for us to get in because the hourly time frame moves a lot more than the 4-hour. Settings for everything else are pretty much the same, as you can see, apart from the spacing. So with this particular set file, we're getting in 1 ADR apart, not half an ADR apart, but the TP settings are the same. We're looking for $500 of profit, which is 0.5%, or we're looking for half an ADR movement in our direction. So the difference with this one is just the spacing, and the fact is that when we get in on an hourly RSI extension, sometimes because it's a lower time frame, you can get embedded in the RSI as price moves up, which causes divergence, and it will move a little bit further against you. So if you space your entries too close together, what you can find is it has quite a negative impact on your drawdown while you're waiting for the market cycle to complete. So the spacing on this one means that we are not really going to get in often on the same day. We want to take a position. If it doesn't work in our favor, we're going to wait roughly a day or so, because it's going to take that long for it to move an ADR against us. By that time, we will be extended on the RSI and usually embedded, meaning that the market's ready for that profit take move. So again, we normally won't get into anything more than sort of 2 to 3 positions, occasionally 4 or 5. So this is the only modification you're going to see against the H4 M5 or H4 M15 strategy and the H1 M5 strategy. But again, if you want to know more about the strategies and how it all works, you can watch the position trading bootcamp. As I say, it's all free on the website, it's all free on YouTube. And the final one is the ADR reversals. So this is a very, very simple strategy. The risk settings and everything are pretty much the same. So as you can see, we get in with 0.2% of risk in this case, and our position, our stop loss distance is half an ADR again, all the same settings. This one isn't using any RSI filters. What we're using in this case is the ADR filter. So we're saying that the price has to move one ADR, 100% of its ADR on the day, and then we take an M5 reversal alert short to get into the market, and then we're looking for a very, very quick scalp profit take out of that move. So you can see that the settings here for TP are set to 1/3 of an ADR, or $250, whichever comes first. So the idea being the ADR reversals are an exhaustion on the day, and then we're looking literally for that quick pullback, 1/3 of an ADR. So we've moved up one ADR. What we're looking for is about 1/3 of a pullback on that entire move. So if you think Fibonacci, if we're pushing very, very hard in one direction, a very small pullback and continuation on Fibonacci would be around about the 38% pullback. We're looking for a 30% pullback. So the 50, the 60, 1/8 on the Fib are sort of a medium and a deep pullback. So what we're doing is we're making sure that our profit target is usually within a very, very shallow pullback if it's going to be a continuation on that move. Yeah, so that's the reasoning behind using a much smaller TP with the ADR. It's also a faster move. We're trading intraday here, so we're waiting for price to get extended on the day. Yeah, so above its average daily range, and then pull back around about 1/3 of that average daily range, which is very, very achievable. And you'll find that most of these trades will be single entries or maybe 2 entries at most. If we do get into more trades, i.e. we need to get into 2 or 3 positions or more in some cases, then we will target a monetary amount instead of a distance, and that monetary amount is going to be $250, which is 0.25% of our account. So we're not looking for big money here. We're looking to grab 0.25% on a regular basis. Yeah, so we're banking often and banking small. Distance between trades is half of an ADR, and again we're doing drawdown control. Drawdown control on this one is when price has moved 1 ADR from your initial entry, we're going to scale out of 1/3 of that position, meaning that if we do need to get into 2 entries, our initial position by the time we get to take our second one will be reduced by 30%. We'll take a small loss on it. As you can see, there's an $82 loss, there's a $65 loss. Yeah, so you're going to take the odd loss, but the big payouts are obviously the ones where it works on 2 entries or the first entry works. Yeah. So again, ADR is all taught on the website. So all of this can be found on the market reversal alert. Market reversal alerts, market structure trader website. So if you go onto the website under the expert advisors, you'll see the market reversal alerts EA, and you've got the strategies here. There's lots of videos on the website, all the free education. The bootcamp is all there for free. Lots of other trading education. The live room, if you want to join me live every day, I trade twice a day for usually about 2 or 3 hours. All the strategies are laid out here that I trade, and these are the ones which I've just gone through there. So as you can see, it's been a monster week. Actually, it's not a monster week. It's pretty much an average week. So hopefully it will continue like that. But that's the market reverse alerts EA, the settings. So everybody that asked me in Telegram for the exact settings, there you go. I've run through them all. I've also posted those set files in the Telegram group. So you can get those set files in the Telegram group anytime you like. Hope you enjoyed the video. If you need to get the market reverse alerts EA, it's available on the website. And if you want to do the position trading bootcamp and learn how to become a position trader and get those results, join me in the live room every day. Okay, speak to you soon.